the world. I'm Nicolas Véron. It's my pleasure and delight to introduce this new session of the Financial Statement series at the Peterson Institute. Once again, we'll talk about Russia, which sadly is in the news. We already did a session on a very comparable topic with Sergei Guriev a couple of weeks ago, but things are moving fast, and I think it is worth updating our assessment of where the Russian economy is going and also the consequences for the financial system more broadly. Of course, this is not a military analysis session. We'll focus on the economy, even so it's difficult in these days to separate things. We couldn't think of a better combination to discuss this than Iikka Korhonen and Elina Ribakova. Iikka Korhonen studied at the Helsinki School of Economics and Business Administration. He got his master's there, went into private banking in Helsinki, then joined the Bank of Finland in 1995. The Bank of Finland in 91, a couple of years earlier, had established the Institute for Economies in Transition, I think was called at the time, known by the acronym BUFIT. It's now officially known as the Bank of Finland Institute for Emerging Economies. So Iikka joined that institute in 95, became the head in 2009, and is widely recognized as one of the best observers of Russia in, I don't know, I never know whether I should say Finland is in Western Europe, but certainly in Nordic Europe, but much beyond, and soon in NATO.
We actually share the same time zone as Ukraine, so we are Eastern Europe.
Meanwhile, Iikka also completed a PhD in economics, also at the Helsinki School of Economics and Business Administration in 2008. He also had visiting positions in a number of different institutions at Hitotsubashi University in Japan and Yokohama National University, at the European University Institute in Florence, at the Austrian National Bank, and not least, in a bit more than 10 years ago, at the Kiev School of Economics. So to also talk today, Elina Ribakova is joining us. She studied nearby in Riga at the Stockholm School of Economics outfit there in Latvia, which I think she joined in the second year of existence in the early 90s or mid 90s. She was a consultant at the World Bank and then at PricewaterhouseCoopers, and then completed a master's in economics at Warwick University in the UK in 1999. She then joined the International Monetary Fund, worked in several departments there for nearly a decade in monetary and capital markets, in the European Department, Fiscal Affairs. Then she worked in the private sector from 2008 to 2013 at Citigroup, and then where she was chief economist for Russia. Then in a number of different firms, Avantium Investment Management, Pioneer Investments, which I think was part of Amundi at the time, Deutsche Bank. In June 2018, I should mention she joined Bruegel, my other employer, as a visiting fellow, and in 2019, 3 years ago, she joined the Institute of International Finance, the IIF, in Washington, D.C., where she's a deputy chief economist, and she's also been a visiting fellow at the London School of Economics in the mid-2010s. So with this introduction, over to you, Iikka.
Thank you very much, Nicolas, and thank you very much for the kind invitation to speak in the seminar. I'll bring up my slides. I'll have 10 minutes, so I'll try to be brief and concise. So the topic, sanctions and the effects on Russian economy. At least for myself, it's sort of educational or instructive to think of this crisis, and this crisis will be the largest economic crisis for Russia since the breakup of the Soviet Union, happening in 3 waves or 3 overlapping acts. We had the initial shock and sanctions introduced, price level shift, Russians becoming clearly poorer, and this has happened now during the first 3 months of the war. Then, because of the sanctions and because of companies self-sanctioning, and because of the sort of very high uncertainty concerning both the war and political actions of both Russia and Western countries, we have, and I'll come back to this, we have a sort of asymmetrical decoupling of the Russian economy from the rest of the world. So Russian imports are collapsing, and Russian exports, because of the high price of energy, are actually doing very, very well. Then going forward, and we will see this in coming months and quarters, and I fear years, there will be a drastic sort of realignment of Russian economy to a steady state where Russian economy is much less productive. People have lower economic welfare levels. There will be less capital investment, less innovation, more government intervention, and hence lower growth. And this is the situation, especially if and when this current war or warlike situation and sanctions persist for a number of years. But coming to the initial shock of the war, so when Russia invaded Ukraine on 24th of February, immediately, I mean the first day of the war, Russians went to banks, went to the ATMs, and withdrew almost $15 billion worth of deposits. They tried to convert much of that into euros and dollars. So you had a big jump in the external value of the ruble. So ruble collapsed initially by 30%. The Central Bank of Russia countered this by raising its key interest rate to 20%. Actually, now it's clearly lower. And then there were many restrictions on capital movements were introduced. So export revenue of export companies had to repatriate at least 80% of their export revenue. Many other capital movement restrictions. So if a foreign investor had or has Russian assets, he or she still is unable to actually get money out of the country. Then this was compounded by the initial wave of sanctions the following weekend. I mean, a weekend following the attack, and of course, many people were surprised how tight even the initial wave of sanctions were. But then, of course, we've had basically from early January to prepare the sanctions. And of course, we are still in the process of introducing more sanctions. Well, actually, especially Central Bank of Russia acted in a fairly smart way in these circumstances. The restrictions on capital movement and the higher interest rates fairly quickly, I mean, within 2 or 3 weeks, turned the tide, and the deposits started to return to banking sector. And then the capital movements or the restrictions on capital movement actually meant that the external value of the ruble started to appreciate, and it's now at least officially stronger than it was before the war. But as I said, it's not a freely convertible currency anymore, so it's not entirely sure what the fixing in the Moscow Stock Exchange means. But this initial shock also was accompanied by clearly faster inflation. So on the left-hand side, you can see weekly values for Russian consumer price index and certain key goods. We are now in a situation where consumer prices are roughly 13% higher than they were at the end of last year, but many goods, electronics, cars, even some domestic food stuff, their prices are between 30 and 60% higher than they were at the end of last year. So this is the initial economic price for ordinary Russians of the war. But as I said, the first initial shock has now more or less faded. Then we have the second wave, or the second act, and this is the asymmetrical decoupling. So we have a situation where Russian imports in March and April have collapsed. We cannot tell this directly from Russian statistics, since customs office in Russia, they have stopped publishing their foreign trade data. But then we can of course look at other countries' data. So here we have export value monthly to Russia from various Asian countries, and I'm showing you Asian countries because they are usually a bit faster in coming out with the data, and also in Asia we have several countries which are not officially sanctioning Russia. But despite this, exports from China are down from the end of last year by more than 50%. Exports from Vietnam, again not sanctioned in Russia, down by more than 70%. Exports from Taiwan, South Korea, which are sanctioned in Russia, down by almost 80% in April. So this tells us that Russian companies are at the moment unable to get many of the components, inputs, spare parts that it usually takes to basically run any manufacturing industry in any country. Over the past 30 years, Russia has become very much integrated in the rest of the world economy, and now, at least on this side, Russia is being decoupled at a very fast pace, and this will have a major negative effects on Russian economy, especially in the coming months. This doesn't yet show up in the official statistics. We got the first quarter GDP numbers, 3.5% year on year. Of course, in the purchasing manager indices, we can already see in March and April that people in companies are expecting output to decline, and they're especially worried about the future. So next six months, what will happen? Next week, we will actually get the first official numbers from April, and then this is now being sort of translated into a situation where many sectors in Russia, many companies have either completely or almost completely stopped production. So especially in car manufacturing, in airplanes, and I mean, these are industries where components, I mean, literally just in time is still very much being observed, and now Russia is being cut off from all of these supply networks. So, for example, if you look at car sales in April, down by almost 80% year on year, and this is because there haven't been any car imports, and basically production of cars in Russia stopped in early March. And currently, the CEO of AvtoVAZ, the producer of Ladas, is saying that perhaps in June they will resume production. But even then, it would be of very, very different type of cars than you and I are used to. So it would be very simple cars, no ABS, no airbags, no navigation systems, because they don't have the chips to use in the cars for electronics and so on. And I think this will be a sort of theme for the rest of the year. A lot of disruption in manufacturing, more disruption in transportation to come, and all of this will of course lead to clear decline in GDP. Our forecast at the end of March was -10% for this year, assuming that there are no more export restrictions levied on Russia. Of course, we know that these might happen. This might actually come. Then I'll close by looking at the other side of Russia's integration. So Russia's exports, value of exports is way up, especially in March and April, because the price of oil is much higher than it used to be. And then in the Russian system, this translates into much higher tax revenue. So both in March and April, tax intake from oil production and oil exports was up roughly 100% year on year. Now in the coming months, this will come down since the price of Russian Urals crude oil has come down. But clearly, if one wants to have wants to do something to Russia's fiscal revenues, then trying to have an effect on energy exports is of utmost importance. Now, funnily enough, even though most countries, I mean, excluding US and UK and Canada, have not officially sanctioned oil and gas imports from Russia, oil companies, shipping companies, and insurance companies sort of self-sanctioning, refusing to make deals with Russian oil companies, have pushed down the price of Russian Urals crude oil significantly since the start of April. So here, the blue line is the North Sea Brent crude oil, and then the red line is the Urals crude oil, Russian Urals crude oil. In normal times, the price difference would be very small, but now we are talking about $30 to $35 per barrel. And this is just companies basically self-sanctioning and make it more difficult for Russia to sell its oil. And partially because of this, partially because of other problems in oil production, in April, the crude output in Russia declined by roughly 10% from March. And the International Energy Agency is predicting that it might actually go down even further 20% by the end of this year. I mean, without further explicit sanctions. But of course, if actual sanctions would be introduced, then this process would be much faster. Then I'll just leave you with this slide showing you how the economic effects of the war will play out or can play out in other parts of the world as well. Both Ukraine and Russia have been major exporters of grain, and countries like Turkey, Egypt, Pakistan, Sri Lanka, several sub-Saharan African countries as well are actually now facing much higher food prices because of sort of stop in export of food via the Black Sea. And unless the export of grain from Ukraine and also from Russia resumes fairly soon, then this might have actually very adverse economic and also political effects in many countries around the world. And I think I'll stop here, and I hope I didn't go too much over time. Thanks.
That's great. Elina.
Thank you so much, and I'm very glad to be speaking after Iikka because he sets a fantastic background for us. So I will, hold on, I'll share my screen, and I will cover. Can you see my screen well? Yeah. Okay. So so I will cover just a few issues exactly so that we have time left for our Q&A. So the first question I want to focus on is, are the financial sanctions working? And the next question I want to talk a little bit about what's next. And Iikka said fantastically the background, why are they working? And the big chunk of it is because of the disintegration of the global value chains and somewhat less due to financial sanctions. Russia has been under financial sanctions since 2014. A lot of measures have been taken, but the financial system is more stable than many believe. We did have the dramatic outflows of reserves early on, but since then the system has stabilized. Why? Because Russia has made a lot of adjustments since 2014, given that it have the expectation about future sanctions. So just very quickly, a reminder what happened in 2014. As you can see on the left-hand side, Russia was disconnected from the global capital markets. The biggest chunk of repayments happened from the Russian private, also not actually private, SOE mostly sectors, not the government, because the government debt is pretty small. And almost 250 billion of external debt had to be repaid as Russia came under sectoral sanctions. So the disintegration from capital market happened in 2014. We still have external debt outstanding, and also we had some participation of foreign investors in Russia's local government markets, but those in total were about 60 billion at the time of the crisis. It is very different from 250 billion of the short-term debt that Russia had to repay in 2014. So how did Russia respond to that? Russia built a fortress and, as you can see, accumulated reserves, and at the same time tried to move away their reserves from whether it is treasury holdings or holding it in the US dollars and to a less extent in euros. There were some analysis about potentially Russia hiding some of the US treasury holdings in other accounts, but I think given the relative sort of, the professionalism of a reserve management team and Russian central bank, I would doubt that they would be putting money in their offshore accounts or something, but it's possible. I just don't have any proof of that. So as you can see, they pivoted away from the US dollar. They tried to buy more gold. It's more than 20% of their reserve holdings because they produce a lot of gold. And it's also something that is easy to hold on shore. However, it's not very easy to use for interventions. And also they bought renminbi, again, not as liquid as obviously US dollar or euro. They also invested in the domestic payment systems. If we would have been in 2014, when we talked first time about SWIFT, disconnecting Russian banks from SWIFT, that Russia is one of those countries that used to use SWIFT also for domestic messaging as well. Partially because of the legacy of the post-Soviet space, when they had outdated payment system and payments messaging systems, it was easier for them to adapt something international. After the risk of sort of being disconnected in 2014, I think at the same time, the idea was floated, but nobody really was serious about it. Russia started building their domestic messaging system. It also started building their domestic payment systems for retail. And ironically, although Visa and MasterCard have withdrawn from Russia, the cards of Russians that are abroad are not working, but cards of Russians in Russia continue to work because the central bank required that also other card providers be linked to their retail payments processing system, and therefore they continue to work. Of course, Russia also provided their alternative MIR card, domestic card, ironically called Peace or World, because it appears neither, but at least domestically, as you can see, the latest data we had available, it was already covering a big chunk or substantial chunk of payments. And I think given that it's a more authoritarian regime, it could require that pensions are being paid to that card, government wages are being paid on that card. So that also forced the adoption of that card. Of course, it's not global. It's only being admitted in some of the former CIS countries. I think Turkey recently announced it's going to use it because of the tourism. But again, the infrastructure is there. Iikka talked about ruble, but the central bank, very professional response and also draconian capital controls meant that ruble again rallied back, and I need to update the chart because it's even stronger now. But we also see that the liquidity of the market is very shallow. That's sort of the flip side of it, of the very tight and of course market, but also draconian capital controls and complete freeze of foreigners' ability to withdraw from Russian markets. So of course then the liquidity collapsed. We see, of course, that there were bank runs in the early days of the crisis. However, again, the system liquidity vis-a-vis sort of the liquidity deficit vis-a-vis central bank has fallen sharply now or reduced. Russian banking system used to be in the liquidity surplus vis-a-vis the central bank, and it swung into the deficit briefly, and then now it's back to basically back to the pre-crisis levels. So what is going to happen next? This is the key point. We are already in the energy wars. Russia is enjoying large current account inflows and also budgetary inflows. January to April, current account surplus was close to $96 billion surplus. It's partially because of the import contraction that already started, that Iikka described, but also because of the large oil and gas revenues. That also has spilled over into very large, almost doubling of the fiscal surplus March relative to February. As a result, central bank is even easing capital controls. The way that the Russian system sort of taxes, quote unquote, different parts of the economy is that oil sector has always paid rents to the budget. More than 70% of their revenue gets taxed away because it's a very progressive system that they use. And then that budget redistributes as it sees fit. Until 2014, a big chunk of redistribution was to high real incomes and pensions. In 2000s, people enjoyed double-digit growth in their real incomes. And of course, they enjoyed living with Putin. But then after 2014, that redistribution happened into the accumulation of the fiscal and fiscal reserves, sort of for the future geopolitical endeavors. Gazprom was always treated differently. Gazprom never contributed as much to the budget. Gazprom was used as a geopolitical project. And if you remember, the energy wars of 2005-06, 2008-09 were aimed at discrediting Ukraine as a reliable transit partner. Now we have the physical war in Ukraine, and the next stage, and we're seeing the sort of the early bells of that, is the Gazprom wars on potentially Europe. We have seen Poland being disconnected, but Poland's contract would have run off this year anyway. Bulgaria was a bit more challenging situation, and of course Finland is no more. There are all kinds of energy supplies disconnected to Finland. So
Elina, I'm sorry to interrupt you. We need this session to be largely interactive, and I'm a bit concerned to see that there are many slides in your presentation.
No, I have one more slide.
I will ask you without any rush, but to move slowly towards conclusion, please.
No, actually, this is my penultimate slide here. So this is my last slide here in terms of the energy wars, in terms of what's happening next, just to give you the background, how much Russia is relying on commodity exports and how much Russia is enjoying the historically unprecedented foreign exchange inflows. So that was it.
That's great, and that was fantastic. Actually, I would listen to your presentation for an hour, but I have a duty to the audience to keep it conversational. So thanks to both, and Iikka, I will ask you to put your camera on again so that we can see you. That's good. So we already have a number of questions from the floor. I guess we're getting more and more. I have a first question to you, Iikka, about the level of the ruble, because when Sergei Guriev was here a couple of weeks ago, he made the point that normally the ruble should have appreciated a lot given the rise in the energy prices. So how do you think about we got the perspective from Elina a minute ago, but how do you think about the level of the ruble? Does it matter? What does it tell us? What's your framework of thinking about that?
Well, it does matter for Russia's basically on how much rubles it gets from its energy exports. So currently, sort of paradoxically, because the ruble is so strong, Russia is actually getting in terms of rubles much less tax revenue than it perhaps otherwise would be getting. But also for domestic purposes, it is important for the Russian authorities to make sure that the ordinary Russians see that the ruble is stable. It's not going to sort of in some sort of a spiraling out of control, because weaker ruble and very volatile ruble have traditionally been always associated with economic crisis in Russia. And now, of course, the narrative is very much that the Russian economy is strong. There are some problems, but actually, Western Europe is in much deeper, or will be in much deeper recession, and we cannot cope with higher prices of energy and energy cuts and so on. So this is partly also a domestic story.
So basically what you're saying is it's an entirely managed exchange rate for domestic communication purposes, or does it send a signal of something real?
It is partially managed, but actually at the moment, because the current account surplus is so large, and there's actually very little demand for dollars or euros, the ruble is perhaps appreciating a bit too much for the central bank's liking. And I think today they announced that they will be cutting the interest rate. I mean, basically to make sure that the ruble doesn't appreciate too much. So there is some degree of market determination.
Anders Aslund is asking whether the swings are by themselves destabilizing the real economy and reducing GDP, regardless of the level. How do you think of that? Maybe both of you. Iikka first.
Very much so. And I think the Central Bank of Russia has fought for many years to increase its credibility in the domestic markets. But I think, I mean, once we are in a situation where it is war, whatever the Russians themselves are calling it, then of course it's very fragile. So even if there are some sudden moves in the exchange rate, they can become sort of self-fulfilling, and then we can see big moves in these very illiquid markets.
I think this is, this is the central bank feels that the ruble is too strong at the moment, and the issue here is the large current account inflows on one hand. So they've already extended the payments that they used to be 3 days, now it's 60 days. They used to be 80, now they have reduced it. However, they're very worried about opening the floodgates, because on the capital side, there is leakage. Historically, Russia always had very strong leakage, and I'm surprised how we have relatively less leakage now, what appears through indirect indicators. But if you remember December 2014, just one large connected payment can completely take away a ruble market, especially of course December was low liquidity. So I think this is on the capital side, the Russian central bank is still a bit wary. They're opening it up to individuals, but they're really worried about the big connected individuals that can take hundreds of billion rubles in just months out through the exchange rate.
So moving to the kind of real economy, there's a question of Pierre Raffi about the impact on employment in Russia. And Iikka, you mentioned the fact that there are a number of plants, for example, in the car industry, which are not producing anything. So all these industries that are being disrupted by the sanctions and the self-sanctioning and the impossibility of importing all kinds of things, do they keep paying their staff? How long will that be the case? Can you give us a sense of basically the paycheck side of the Russian economy?
Well, according to Russian law, for example, foreign companies that are leaving Russia, they still have to pay for 3 months the salaries. And I would think that, especially for authorities, it is important that people have jobs, even if they are paying very little at the moment. So they are attached to something. And traditionally in Russia, it's always been the real wage that adjusts. So even during the global financial crisis, the actual unemployment rate went up by very little compared to many other countries. It was the real wages that adjusted. Now, of course, it might be slightly different since we are talking about basically complete sectors being unable to produce anything or producing very little. But I would think that the government will if they have to, they will subsidize companies to make sure that they keep on at least some of the labor force. Thanks.
Elina?
Yes, and I also wanted to add that the Central Bank of Russia has published a very nice sort of Russian central bank beige book version. They have invested a lot into their regional units. So they surveyed more than 13,000 enterprises across Russia and across industries, and there is a schema following that. You see already many enterprises talking about lack of export markets, lack of import components, and that in fact impacting their labor force. So on the extreme, foreign car manufacturers already put their people on severance payments, some on severance payments, some on sort of unclear leaves of a few months, but most expect people will have to leave. Russian enterprises are also beginning to use that practice. And I see the related question on unemployment. What happens in Russia in unemployment is that the unemployment doesn't really spike that much. Ironically, Russian labor force is the least protected for sort of paternalistic state, is that because your employer comes to you and says, look, you don't want to go on vacation. Look, you don't want to work so many hours. And you say, oh, yes, I agree. And I sign. And I think we're going to see more of that. And we're already seeing that according to the surveys.
So that's a famous Soviet joke, they pretend to pay us while we pretend to work, right? So we're back to that world. But Karafi is also mentioning the fact that there are no longer any journalists. There is a lot of crackdown on communication. I mean, foreign journalists, but the Russian journalists obviously have limited freedom of expression. To both of you, maybe, how do you get anecdotal feeling for what's happening especially in the corporate world, but also for households? Are there ways of getting a sense of what's happening at the grassroots level, or is that communication completely cut off now? Maybe Iikka first.
Well, first of all, I mean, there are still surveys, and some of them are useful. There are media that report what is happening, more or less what is happening. There's still, we can follow Russian social media, which has different stories about what is happening. So in that sense, it's not completely cut off. But on the official statistics, yeah, so far I've tended to trust the Rostat quite a bit. But as I said, now Customs, Rostat, Central Bank of Russia, they all have either stopped publishing certain numbers, or, for example, in the banking sector, they have moved into much more aggregate reporting than before. So it's this is something that we are really trying to keep an eye on what is happening.
I agree with Iikka that the general statistics has some iffiness, especially on the GDP statistics. We've seen that in the past. Adjustments, you know, the way they calculate maybe the sort of the deflator, you know, it has history. So this is one of the series people played with, and also it's capacity in Rostat. Rostat doesn't have very strong capacity relative to our other organizations. Unemployment and real income numbers I've also seen in the previous crisis, when the original announcement will have maybe double-digit reduction in real incomes, and then the amendments come, and then suddenly comes very small, almost nothing. But of course, now what I noticed that the breakdowns are not available. The production numbers on the high frequency are not available. And also, of course, there are much fewer people to discuss it with, you know, that we're all sitting outside. And the domestic analysts, of course, are much less forthcoming because they feel that they would be cooperating with people who are making sanctions on them. And they're afraid. So if you were to talk to one of the Russian banks, they will be very cagey because they're worried that their boss will come to them and tell them off for any exchange of information with somebody else outside.
To get a concrete feeling, I mean, Charles Denmark is asking about regional differences between urban and rural areas, between different regions of Russia. Do you get a sense of the geographical differences? I'm sure that the impact of what is happening is very differentiated, but I have no idea how it is. Maybe Elina and then Iikka on this.
I can start because I do have family in different parts, and I do have a long and painful experience of elderly having to look after them in the middle of nowhere, so to say. It's very different from Moscow, and it has been very different for years. There's been this period of 2000s when people felt a bit better. You know, they got water and gas in their villages. And it's ironic that gas in Russia in the village goes via pipeline outside. It's not dug into the ground. So it goes around your entryway, you know, and then it keeps on going. But the healthcare system, educational system suffered a lot because of the fiscal consolidation in 2014. So they started consolidation from the regions. So responsibilities are still there, but the money stopped coming. So it's devastating. And that's why COVID lockdowns were so small. So now these people are going to feel the pain even more. If you're talking to colleagues and friends in Moscow and St. Petersburg, there is a weird schizophrenic feeling that nothing is happening. People are going to restaurants, people are happy, they still have jobs. If you are in an industrial base, if anything, headhunters are calling you and are offering you the jobs because you need to rebuild the value chains. But the regions are, I think, people dropping below the poverty line, and I've seen an estimate, but I don't remember exactly the number, but it will be dramatic a reduction because many people are already living sort of hand to mouth, especially in the regions, and have no access to services.
Yeah, and well, of course, if this decoupling sort of gathers pace, I think also in bigger cities, many people will be either they will have to seek for new jobs, which will probably pay less, or then they will be completely out of the jobs. And we have also seen, even though then it's actually tricky to interpret the official numbers, that a lot of people have left, but then many people have also come back. So, I mean, especially during the first weeks of the war, a lot of people left Russia and were sort of afraid what would happen, and were trying to look for jobs in Europe, in Turkey, in Georgia, Armenia. Some of them found something and some didn't, and then they went back. So it's actually very difficult to say how many tens of thousands or even more people have left.
So in your view, it's maximum in the hundreds of thousands, not in the millions, right?
Yes, yes.
One question about China. So there is this narrative that, of course, China can substitute for the sanctioning countries to a certain extent. How much do you observe that? Do you see from a Russian perspective import substitution, not domestic, but through imports from China? Do you see more Chinese presence in specific industries or activities? Or is that something only potentially for the future? Are there any indications of that? Iikka.
Yeah, well, as I showed in the chart, in March and April, also China's exports to Russia collapsed. So at least so far, they have not replaced the other countries and their companies in Russian markets. And as we know from experience with Huawei and the US ban on selling the sort of most advanced chips to Huawei, Chinese are unable to produce the sort of most advanced chips. So it's Taiwan and South Korea, and then marginal Japan, which are actually supplying these. So if these chips are unavailable, then Russia cannot get them from anywhere else. And this actually same applies to some other industrial goods. I mean, in various sectors. Over time, China will replace some of the goods. There will be other countries like Vietnam, perhaps some other emerging market countries, Indonesia, especially Malaysia, that can supply Russia with some of the goods that they have lost. But overall, this will take time. The goods will not be as high quality, and they might even be more expensive because you have to ship them through longer distances.
Some questions about this issue of import substitution. So if they cannot really get them from abroad, can Russia produce what it needs, at least what it needs critically, for example, for the weapons procurement industry? This is a hugely complex question, and of course it depends a lot on the time horizon, as Iikka, you just commented on, for imports, but we have questions on this from Byron Callens, who refers to Russia getting to a wartime economy, from Andrew Zvizdin. who also asked about things like semiconductors. What's your framework for thinking about it? Is Russia doomed to lose those components and those access to value chains, or can they do something about it? Elina?
I think they're doomed to lose the access, at least in the near term. So again, so this survey and then High School of Economics also produced analysis. I know Iikka's team has produced analysis, but the imported components, they might have 3 to 6 months of inventories, which they're going to have to draw down. And then they beginning to renegotiate. But what they're finding, it's not even just high tech, it's also the lower tech items. Just because they've been over the last 30 years, very integrated into the global value chains. And it just maybe economically, we're very focused on high tech, but even for every small little part, it just didn't make sense because maybe the supply domestically or demand domestically is not big enough. So then there will be an enterprise that imports this particular screw. It cannot get that. So on a very small scale, we know that through Turkey, Armenia, maybe Kazakhstan, there is some smuggling happening. And of course, it cannot possibly happen on the big scale. So we do expect many factories to come to a standstill in the next 3 to 6 months. On the military production, we have an oligopolic market structure in Russia for the military production. And the issue is people track Russian military spending, but they forget that big chunk of it, is also eaten up an increase in prices because it's a very oligopolic structure and also very corrupt structure. I personally don't have good information on the tanks. I do follow Michael Kaufman, for example, from CNAS and others who try to go equipment by equipment and also track Russia's military losses and then see which one of those they can replace. So that's my framework.
Yeah, perhaps also on this, I think we've looked at, Russia has been running different kind of import substitution programs since 2012. And in very few sectors, they have been actually able to increase the share of domestic value added in especially manufacturing sectors. Food stuff is a different matter. Russia has become the world's largest grain exporter. They are self-sufficient in many goods, but in manufacturing, it's perhaps only pharmaceuticals where they have been able to really increase the share of domestic value added in consumption. In all other sectors of manufacturing industries, actually they have gone backwards. So they have not been able to do import substitution at any meaningful level. Of course, now they have to do it, but it will take time, and most likely the products will not be as cheap and not be of as high quality as before.
There's one case of substitutions that I was particularly interested in, and is echoing a question that we have in the Q&A, which is in payments. So Visa and MasterCard stopped their operation in Russia. There was a story that UnionPay was largely substituting for that. That's a Chinese state-owned system for international payments and cards. But then there were news that UnionPay was also limiting its activity in Russia. So Elina, can you give us the latest on this and whether Russians, normal Russians, so to say, still have access to international payments through cards, or is that now over?
It is very limited. You're right. UnionPay backed off, and then the UnionPay, and their statement was very neutral. So it's people familiar with the deal said that it's likely because of sanctions, but the statement was very, very neutral. So what happens is a lot of people try to travel abroad and get something like UnionPay card abroad. So this is the way, and then they come back. So Turkey is a popular destination for it.
This?
Yeah, and actually you can see this. There was at least one paper that looked at online sales and shipments to Russia, and you can really see even for Chinese e-commerce vendors that their sales to Russia collapsed, basically because the Russian credit cards didn't work anymore, and at least so far they haven't found suitable alternatives.
Russians can literally no longer buy on Alibaba, even if they want to.
It's very problematic, yes. And, you know, Alibaba or other payments, you know, news, actually, there was a request for some Russians that, look, you know, if you want us to continue being able to read international press, at the moment, we cannot pay for it. So they're also forced to just listen to Russian and read Russian propaganda, because if your Guardian or Times or whatever subscription has run out, there is no way for you to pay for it.
And actually, that also applies to scientific journals. So Elsevier and so on, they are not selling their services in Russia anymore.
So let's talk about all this money that the Russian government makes from oil exports. There are several questions about this. A user called Michael is asking whether there is any credible strategy of diversification of the Russian economy, which strikes me perhaps as a pretty ambitious word to utter at this point, but I'd be interested in your views. And more generally, Rachel Zimba, Jarwin Bell are asking about, you know, what will the government do with all that money? How is the strategy shaping up? Maybe it's too early in terms of use of those massive surpluses, because the picture is that, you know, the consumer is being pinched, but the state has a lot of money. So what is the state going to do with that?
Well, on diversification, I mean, this has been a topic for more than 2 decades. Yeah, it would be nice. It would be good. I don't see it happening anytime soon. And then on the fiscal policy, I think there will be a lot of pressure to put at least some money on increasing pensions and other social expenditures. I mean, as we talked, basically the Russian households have become 10 to 15% poorer because of higher inflation. So at some point, they need to be, at least some of that need to be covered. And actually, according to Russian constitution, the real value of pensions shouldn't decrease. So there will be a pressure to do something along those lines. Then at the same time, the increase in spending on military and internal security jumped 150% year on year in April. And as long as the war continues, that needs to be taken care of. I mean, it takes a lot of money to have people around. I mean, Syria didn't take that much money. There were very few ground troops, but now you have literally tens of thousands of people that you have to feed. It takes a lot of fuels, and the missiles, armaments are not cheap.
Thank you. I agree. I think the early statements from the Ministry of Finance has been about relatively timid support to the economy. Also, what they have done after 2014 is potentially an indication they actually cut fiscal spending dramatically. In the recent elections, we haven't seen them increase spending, and it's been already almost a decade of those few elections. So my expectation would be that this money will be channeled towards the war effort and domestic police enforcement rather than pensions or social assistance. And we already see some statements by Oreshkin, president's advisor, sort of like kind of dismissive a little bit of this constitutional comments that Iikka pointed out about pensions not being able to fall in real terms.
So we have questions from particularly Byron Cannon, Rick Newman, who are asking whether, because the picture you're painting is pretty dire generally, so is it going to be the case at some point that the state itself feels a pinch? Of course, that depends a lot on the whole discussion about oil embargo, and Iikka said that. But do you see, and the current news flow on default is kind of artificial because it's default imposed by the recipients rather than the payers. But do you see a forthcoming fiscal constraint and unsustainability on the Russian state side, or is that at this point still not going to happen given the magnitude of the money being made with oil and gas? Elina?
I think the sheer magnitude right now, and that's what I was showing on the last chart, is too significant for Russia to feel the pinch. And if you look at simulations of trying to reduce production, trying to play with the exchange rate, it's very hard to generate a situation where Russia is not having positive year-to-year inflows to the balance of payments, but particularly to the fiscal accounts, and that's why central bank is worried about strength of the exchange rate, because they can also, by exchange rate adjusting, it creates a buffer for you on the fiscal accounts. So I think not only we have the political problem on this embargo discussion, we also need to work very hard technically to make sure that we generate the right conditions. Because if oil stays, for example, at the current level, the discount is the way that Iikka pointed out, and we have 20-30% contraction in Russian export, they're still making money.
Yeah, but that is true. But at the same time, I mean, there will be some hard choices on sort of where the extra money goes, and if the war and the sanctions persist for longer, there might be even some calls for more help to at least pensioners, but also businesses. And then, of course, it will be interesting to see what kind of priorities the Russian, basically, fiscal policymakers have.
So both of you have painted a picture in which there are delayed effects of what was decided in terms of sanctions and their effects, right? So people get paid for a few months, but in a couple of months, they no longer will get those paychecks. A number of components are inventories, but therefore, say, maximum 6 months. And after, so basically in the fall or winter, those inventories will be depleted, things like that. So we will see a number of delayed effects of things that were actually decided immediately after the invasion. I know this brings us away from economics, but maybe as a last question to both of you, how do you think the Russian government will adapt its reaction function when these effects start to materialize in a big way, which they haven't yet, if I follow your narrative? Iikka, and then Elina, you can also add, of course, any concluding thoughts, because unfortunately we're almost at the hour and we left a number of questions unanswered.
Yeah, well, I mean, that's a very important question. Unfortunately, I don't have a good answer. I'm not entirely convinced that the top leadership actually even understands, or at least understood, how integrated Russia is and how much this decoupling would actually hurt. And of course, many people in Russia didn't believe that the kind of sanctions that have been done would be forthcoming. So when these things start to materialize, and we are perhaps in autumn, and things perhaps sort of the war of attrition goes on in Ukraine, there might be some unhappiness within sort of top elite about the situation. Whether that will have any effect on policy, I have no idea, outside my expertise. Let's put it that way.
And now you have the last word.
The last word on the Russian reaction function. I remember in 2008, the first big crisis sort of in a while. And Medvedev at the time, president, was saying that, look, we're going to increase spending on security. And the budget they passed months after the actual shock, 6 or 9 months by the time the economy was recovering. So my expectation is that the money will be channeled first to security, domestic anti sort of protest sort of measures, and then we'll see what happens.
Well, on that very uplifting note, I want to thank you both. This was a fascinating session. The magnitude of structural transformation in Russia is awe-inspiring, I think, and very humbling. The next session we'll talk about China and the buildup of leverage and the whole issue of debt and leverage in China with Tom Orlik, who is the global chief economist of Bloomberg Economics, and Tianlei Huang, of the Peterson Institute for International Economics. That will be on Thursday, June 9. And in the meantime, again, much gratitude to Iikka Korhonen and Elina Ribakova for a very thought-provoking session. Probably not the last one in this series about Russia. We will keep trying to understand this mysterious space. Thanks very much.
Okay, thank you very much.
Thank you.
Thank you.